Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the opening shots in a serious trade war have now been fired. On Wall Street, the three major equity indexes fell 1.5%, on track for their steepest drop in 6 weeks, gripped by a growing threat of a global trade war. The US administration announced it will impose tariffs on about $60 billion of imports from China, as well as impose restrictions on technology transfers and acquisitions by Chinese companies. A range of countries, as our allies, are said to be exempted from the steel and aluminium tariffs, but New Zealand doesn't appear to be one of them. At the same time, Congress is working its way through a massive stopgap funding bill designed to keep their federal government operating until September. It is a pork-laden $1.3 trillion measure with something for everyone, except perhaps some Trump-favoured projects. There is little in there for the border wall, for example. Meanwhile, China is reported to be readying a trade war response against the US with their own tariffs focused on American exports of soybeans, sorghum and live hogs. These products are core US exports and originate in states that are core to Trump's support base. Officially, they say they will take all necessary measures in response. Keep an eye out for what China does regarding tariffs on commercial aircraft. Yesterday, a unit of China's Southern Airways has signed a $3.2 billion deal to purchase 30 narrow-body planes from Boeing. Huge future orders are in play here and is a real leverage point for China. And China lifted a key interbank interest rate yesterday in response to the US Federal Reserve raising its key lending rate in a likely bid to fend off potential downward pressure on the yuan and possibly a surge in capital outflows. The increase is the third time in a row that China has shifted interest rates following a Fed move. In the real world of business activity, the US factory PMI reading for March is strong, but the same reading for services slipped. Of note is a reported rises in input costs, which are said to be rising at their fastest in 4 years. In Europe, the pace of expansion has slipped to its lowest point since the start of 2017, and in Japan, they're reporting improvements, but at a slower rate. In New York, the US Treasury 10-year yield is lower today at 2.84% after a flight to safety following the opening salvos in the Trump trade war. This has completely overshadowed the Fed's hawkish dot plot from yesterday, but investors should note that this remains in place. The gold price is up $2 today and now $1,327 an ounce. Oil prices are marginally lower today, now just under $64.50 a barrel, while the Brent benchmark is just under $69 a barrel. The Kiwi dollar will start today little changed at 72.2 US cents even after the US tariff moves. On the cross rates, we are half a cent higher at 93.7 Aussie cents and at 58.7 euro cents. That puts the TWI at 73.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.